Okay, welcome to this webinar on the 11th of September 2017. Today we're going to go over a few things and have a look at some of the theory, but more importantly kind of focus on kind of maybe some of the psychological aspects of trading and in keeping your head in the game. Before we do anything, I can see Matthew has a question here. When we get the new product key, do we have to change it on every single chart below? No, you don't. You only have to do it on one. So on this one here, I put it just up here. You'll notice that this one doesn't even have one, and that's because on one of the other instances, it's been put in, and then this one reads it from a file on the computer. So you put it in one, and all of the other charts and indicators should update automatically. That'll be nice to. Previously, we had to do it on every one, and it was a bit of a blow. Right. So I'm going to very quickly. I'm going to go through like the whole process quickly. I'm not going to focus on currency strength. I'm going to focus on supply and demand. So kind of go back to the basics a little bit and just walk back. Let's walk through it step by step because it's pretty important. And also just to reiterate that it's actually pretty simple. It's a very simple thing to trade. It's just difficult to do it. And so if you're finding these levels and you're marking off in your charts, this is good. This is really good. If price is coming to them and it's bouncing, this is great. The difficult bit is, of course, clicking into the trade. So we'll kind of discuss the whole array of this stuff here today. Make sure everyone, okay, good, super. Okay, so I mean, I've tried to simplify the process of trading supply and demand. A lot of people have attempted to complicate it to the degree where it makes it almost like a daunting task. And while there is a lot of theory in supply and demand, it should be pretty simple. And the process looks like this. So first and foremost, you have to identify the trend. Why? Because you need to know that if you should be buying or selling, you need to know if demand is driving price or supply is driving price, because this will, of course, keep you on the right side of the market. So if we start off on that, identify the trend. How would you identify a trend? It's easy. You go on the time frame that is your longer term time frame, and you look, is price going up or down? What's this one doing? Is it going up or is it going down? Well, as a matter of fact, it looks like it's ranging. The price has been down here before. We're coming back again for the fourth time, and now we're going higher. We have this level up here, which is above price, and until we reach that, we're probably gonna trade between this range, between these lows here and this high here. So this is a sideways price or a sideways market. If you go to the hourly chart and you look, well, then we're going higher. If you go to the 30-minute, we're still going higher. But sometimes when you go on a small time frame, for example, the 1 minute we're going down, the 5 minute we're going up, the 50-minute we're going down, the half an hour we're going up. I mean, what do? Well, you have to focus on the one that is the time frame that you're using to assess a trend. And for this, I'm typically looking at like the weekly or the daily. But recently, I've been looking at the 4 hour for the trend, and then I've been getting in on for example, the hourly or less. And so this is pretty important here. And we're going to have a look at a few examples. Is this moving higher or is this moving lower? I mean, a really easy way to answer this question is, are the boxes below price or above price? And you can see actually we have X's above price and we have boxes below. That means we have demand being respected and supply being consumed by the opposing demand. That's on the 4 hour chart. If you go to the 1 hour chart, you can see that we have boxes below price and we have boxes above. What does that mean? Well, that means taking the information from the 4 hour chart, we're moving higher down to the 1 hour chart. This is probably some kind of a correction. And so you want to be buying at demand. Have a look at another chart. We'll look at the euro US dollar. We'll start on the daily chart. Price is absolutely positively, as of late, moving higher in a real hurry. We have these boxes below price. We have a box up here above price. That means that we are reaching opposing supply here. Go to the smaller time frames, price is drifting higher, and it's been moving higher for quite some time now. If you go to the really small time frames, you can see the price is actually moving lower. And so it's as simple as that. You just want to focus on the time frame that you're looking at for your trend, and there is no right or wrong one. You just choose the one that you're most comfortable with, and then you use that. Some people use the longer term, others use the shorter term. It's completely up to you. We have a look at one more example. Is this moving higher or is this moving lower? On the 4-hour chart, we're moving lower. On the daily, we're also moving lower. On the weekly, looks like we're moving higher and we're having a bit of a pullback. And so you take this information with you. This is actually really interesting. Look where price is now. We are actually testing weekly demand. Do you want to sell? Well, you might question a short now because you would be selling into weekly demand. So you take this insight onto the smaller time frame. So if this is your trending time frame, the weekly chart, then you know that that you should be buying, and as a matter of fact, price has reacted at weekly demand. So you take this information to your, for example, your entry time frame, then you look for a place to buy. You can see the price is starting to wriggle higher. Now we've formed this base. We have a box that's been formed below price, and so far it's still there. And so we can expect price to wriggle higher from here because of this. Keep in mind, price has been back to this level before. It's been back to it here, and so when you look at a price structure like this, you have to ask yourself the question constantly, has price been back to this level before? And so has price been back to this level before? And if you look left, it almost did here, and here you can see, yes, it has. Price has indeed pulled back to this level before, and it pulled back to it here. And so while this could certainly provide support for price and attract bullish liquidity, it doesn't mean that it's not going to move lower. It just means that we might have a medium-term retracement up to supply before price potentially continues down to this fresh demand that we have here at the bottom. And so when I look at this, I wouldn't classify this as demand. I would classify this as a reaction to the demand. The demand is here, and this is a reaction. So the parent is here and the child is here. So this is actually a test of the parent, as you can see. Okay, kind of got ahead of myself there, but you can see here the trend is moving higher here. So what you like, a really good thing to do is to find the origin of the current move. And so I'm going to go on the smaller time frame for that. I'm going to go away from the CAD because of the mess that those interest, those overnight rates caused. So we're going to have a look here. And so you can see here that currently, I mean, price is moving higher from here. So you look at current price, then you look at the origin of the current move. Where's the origin of this move? Well, the origin of this move is just here. And so you box off this area. Let's box off the whole area just for the sake of example. And then you ask yourself the question, has price been here before? Is this a parent or is this a child? So let's refresh. Has price been here before? And this is how I do that. I normally mark off the low like this, and I'll ask myself, has price been back here before? And you can see, well, since this low, price had not been back here. This is a fresh break away from this area here, which is probably daily demand. And you can see right here. So this is actually the daily demand, fresh untested daily demand. On the 4-hour chart, this is a test of the very high of that daily demand. So if we have a look here, you can see that we actually have a high of this accumulation, and price came pretty close to it, and this is what is holding price currently. And so the real demand is down here. We're just testing. We just fedded some pools of bullish liquidity just at the edge of here. And a lot of people do this because they know that once price comes here, they want to be buying, but you can't expect that every single person, every single market participant is buying at price 12732. It doesn't happen. So what happens is you have people cascading their orders in and around these levels like so. So you'll have someone that'll start buying here. Someone will start a little bit higher, a little bit lower. So you have these different pools of liquidity, limit orders, unfilled limit orders, cascaded in and around the areas that people are looking to buy at. And this is because, I mean, people want to ensure that their orders are getting filled. So they're going to put their orders in relatively high. Imagine that these extend over here. I just didn't want to try and draw like a line about as straight as a dog's back leg. So I'll leave it like that. But imagine they project into the future. And so, I mean, if you consider like a huge institutional a trader, let's say he has, I don't know, 100 million that he wants to open a position and buy 100 million units of the pound USD. Just a completely hypothetical example. Can his order get filled if he puts the whole order in at this level here? No, it won't, because I mean, an order of that size is going to cause price to move. And so what they'll do is they'll have an algorithm, and the algorithm will take this $100 million order and it'll slice it up into small bite-sized pieces, and it'll throw it in the market like this. So when price moves down into a level that is you can expect we'll see some kind of reaction. When price goes down at this level, the algorithms start dicing up levels. Sorry, these little pools of liquidity, these orders, they start throwing them maybe like 10 or 20 or 30 lots at a time, like doof, 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 doof. And eventually price will react to that, and then it'll bounce, and we'll see a rejection, then it'll move higher. And typically in these algorithms, they'll define the worst price that they're willing to pay. So as price feeds into the area, the algorithms start throwing in, start filling orders, doof, 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 like that. And when this occurs, price will start to move up, and then this is going to move price in the direction of their worst price. And if price moves above that, then the algorithm is going to stop filling orders, and it's just going to wait. And so while we did manage to get maybe order level 1, 2, and 3 filled, levels 4 to 17 are still unfilled. And so these orders here are still down around here like this. And so it's really interesting and very important to know that when price reaches a major turning point, so the origin of the current move, like we just looked at a minute ago, that there's very, very high likelihood that there's going to be people that are looking to buy once price comes down here. And this is where these orders are going to start to get filled. And so buying here, you can, it's lower probability. Lower probability, lowest probability. So this is the preferred. This is like first priority, second priority, third priority, fourth priority. So if you're buying up here at the top, these are low probability trades. If you're buying down here at the bottom where price is at a huge discount, you're going to be trading where the smart money has their orders. And so this is ideally what you want to try and train your eye to focus on. Let me delete these lines. And so when you look for the origin of the move, you're forcing yourself to focus on order filling that was strong enough to push price from here all the way back up to here like that. So you know once you come down here, there's people that are looking to buy. You can do it on any time frame. You can do it on the daily. Where's the origin of this move? It's down here. And so you can expect price, once price starts to move back into here, down here and below, people are going to be looking to buy this level here. And likewise, for this whole move here, we're kind of standing on this. This is like the origin of this move here, this major swing. So when price comes back up to here, you know that there's going to be a lot of people looking to buy at roughly this area here. Okay, so we'll go on the smaller time frame just for the sake of example. Let's see if we can find something else that's a little going to work for us. We'll look at this one here. So in the origin of the move, this is the current move here, and we can see that we have this down here. So we have this area of demand just here. So we mark it off like that. We mark off the low, and then we answer that question: is this a parent or is this a child? So we'll scroll back and we'll have a look, and we'll see what's it reacting on. Is it reacting on anything, or is it established independent of any other area? And eventually, if I can get there, and I know this is a fresh area because I'm looking to buy right here. So price managed to come to this area here, and this is so unbelievably interesting and exciting, and I love seeing stuff like this because, okay, price reacted right here. Who would have guessed that price would have reacted right here? But you know what? This is exactly where price should have reacted. The reason being is that you can see how price left this area here and it accumulated, then it went higher. So when price left here, price had already, and you can see where price went back to, tested the edge of this pool of liquidity here, the lowest being here. So that means that you do not want to be paying a price any more expensive than the 107.32 after price leaves this area here. This is the most expensive you want to pay. And so what does that mean? That means that you'll have to sit on your hands and wait for price to come back, because this whole price structure here, this whole thing, this monster move right here, it's all standing on this. And I have an order to buy here, and this is the cheapest price that you want to look to buy at, and this is exactly where price came to. And it might look like magic, or oh, this is you're picking like only the juiciest cherries or apples. It's not. It's completely expected behavior for that reason, and it's simply because that is where price managed to return to in the past. Price moved up, a lot of buying here. This is a great area to buy. When price left, those wicks are showing you how deep price went in order to fill orders, excuse me. You can see it came down to there, and this is exactly where price went. When price comes down here, I know that if price managed to move that strongly off this level here, can you imagine what it's going to move at when it comes back to here? And if you look on the daily chart, what does it look like? Well, then you have a textbook perfect buy on the Kiwi, sorry, on this price chart. I said Kiwi there, and that's because the exact same thing happened on the Kiwi. And I missed this blasted trade by a fraction of a pip, and I'll show you exactly where it was. Where is it? Here it is, right here. I had an order to buy right there, and I missed it by a fraction of a pip. Right there. And so price came back to this level here. So when price comes back here and it leaves, what does that mean? That means you're not buying anywhere in here, nowhere. You're not even going to consider it. You're going to wait until it comes back to at least this price here. I mean, you can trade here, but you need your stop to be somewhere protected, which is going to be below this low here. And so this is the most expensive you're going to pay for it. And if you look left, this is exactly where you want to get in. Price came down, we accumulated, we saw some nice reactions. This is great. This is, as I mentioned earlier, this is what the algorithms are doing this. Price comes down, we start filling orders, doof, 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 and then we see a big jump. The algorithms stop filling orders. The dumb money gets in. Oh, price is going down, we'll start selling. They start selling. They start selling. And the smart money starts buying. They buy. Price comes down, we get down into their threshold, their little window of opportunity, the price, their optimal price. They start filling orders. Doof, 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 doof. Price reacts. Boom, it jumps up. They leave the window of their optimal price. Then they wait. And then the dumb money, us, I suppose you could say, the retail, price is going up, we start buying. Price is going down, we start selling. So price comes down again. The smart money is waiting for price to enter that little window of opportunity, and it does as soon as it reaches the lows of where price went to previously. When it comes back down to here or here, then they start buying. Boom, 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 boom. And then this was the last attempt. So we actually had 3 attempts, 1, 2, 3. We probably had a 3-point divergence down here, and this was enough to cause price to leave. And then price has not been back. So this is why this was a really nice area to buy at, and that's why this is a really nice area to buy at. Price came down here, nice reaction. When this happens, then we can't pay a price any more expensive than the low of that. So you have to sit in your hands, you have to wait, you can't touch that, you have to wait the price come here. And price came to it roughly, and price came down, and then we've identified this area of accumulation here, this really nice continuation pattern, and this is where I want to buy. And so I'm going to wait for price to come back here, and it hasn't done it yet, so I have to wait. And you can do this, of course, I mean, this is the daily charts. Sometimes you'll be waiting for weeks or months. But the cool thing is, I mean, look at this. We had a 38 pip risk, and look how far price went, maybe a 20 to 1 or something like that. And you can see that when price came down to it, you have to ask yourself, where's the current move? The current move is here. We have this, it's marked off like that. And so you can expect price to go back to at least this level here, for example, and it did. Price went up to it and we went through it. And so you do the same thing. You get out of trades the same way that you get into trades, if that makes sense. So you mark off the high here, then you go back. There's a parent, there's a chart. You go back. You can say, okay, actually we're reacting to this. And this is reacting to that. So price has already been back to this level here, which brings our attention to this, just here. This is still fresh and untested, so you can mark off this. And it's debatable whether or not this is very fresh because price has already been back to this level here. But we want to get out of the trade, and so this would be a pretty good place to get out of the trade. You wouldn't wait to get out of the trade here. You'd probably get out of the trade at close to the highs here. Yeah, okay, that was a lucky punch, but price came pretty close to that. And so that's what you want to do. You want to try and find the areas where price has not been, because this is where price is going to turn. When price left here, this is a really good example here. When price left here, we left, we opened, we went down, we tried to move higher, we couldn't. What does that mean? When this happens, you've got to sit on your hands until price comes back up to here. You don't sell here or here. Here we have a nice accumulation and a release. You don't touch it. You cannot take it. You have to wait for price to come back to parity, which is at least the high of this price here. And this is where price came to. And it seems like magic, doesn't it? But it's not. It's super, super simple. It's just a matter of looking at price in a completely different way. And we found this. I'll remove that. We found this area here, almost to the pip, where price reacted. Is it magic? It's not at all magic. It's just a simple understanding of liquidity in the market. This is where we would expect price to turn around. Why? Because this is where price told us that the liquidity, the bearish liquidity starts. So obviously price is going to slow down here and start to move the other way, which it did. And so here we're on the bigger time frame. Let's move to the smaller time frames. Let's just do this. So we'll go like that, and we'll have a look. You can do this on any time frame. You go to the 15-minute chart. You say, okay, the current move. What's the current move? Well, price is kind of, it's price. Price is moving higher. We have this pretty decent swing from here to here. And so in this, I think we can all agree this is a pretty substantial turning point here. Price came down, we reacted, and then we left. And you can see that price moved pretty nicely away from that area. And so you mark that off as the most expensive price that you'll pay for the Kiwi American dollar. So you do that, then you mark off the low, like that. You scroll left, parent or a child. When you think like, wow, what a mess. And that reaction, wow, what a mess, means that this is nothing. We don't touch that. You keep going until you find what you're looking for, and we have something here. And the indicator has marked it off for us, so we'll just do that quickly. Just mark off the whole area. We'll mark off the low. We'll scroll left. Okay, price has not been there for a very long time. I don't even know if I have any. Okay, here you can see that price has been back here. Does this look like a fresh area? No, it doesn't. Where's the fresh area? The fresh area is, okay, tell me when to stop. Let's just start typing in the box when I should stop. Where should I look to start to buy? Just put like S in the box when you want me to stop. Anybody? Can anyone hear? Okay, I'll do it. Just, yes, perfect. I mean, this is the most expensive price that you want to pay, because this price left, it came back, it consumed liquidity down to this level. So this is the most expensive price that you want to pay. If you look a little bit lower, we have this release just here. So somewhere in here, like that. We zoom out and have a look, see where is that in relation to where price currently is. Well, actually, it's all the way down here. And so you think like, wow, we started on the 50-minute chart and we were looking at this, but you can, even on the 50-minute chart, you can see that price, the ideal entry, is actually way lower than where price currently is. And so this is where you would start to look to buy. And isn't it funny how this area of 15-minute demand is the area of demand that is responsible for taking out the most recent swing high on the daily chart since its release. It's unbelievable how this stuff it works. It's absolutely phenomenal. You can see price came down to here, so we can see very clearly the price fed into here nicely. We had a little reaction there. Let me clean this up. It's been tested once, and so it's been tested once, and so we can expect price to move through it more easy next time. And so what do? You mark off the low. This is the most expensive that you want to pay for that. And you do your analysis like we just did, and it actually brought us back to this 15-minute area of demand just here, which is roughly the same place where a daily entry would be, because we would have an entry on a daily chart, excuse me, somewhere like this. Let's something like this around here. But you would do, here's the green candle. Is this accumulation candle? Close enough. Is the range of this candle within the body of this candle within the range of the previous? No, it isn't. And so the daily area would look like that, just like that. So this is the daily area, but we don't know if price is going to come there because we have that really important 15-minute area of demand just above price just here. So price might not come all the way back down there. Okay, Stephen is saying, Sarid, what are you using for your default settings for supply and demand? It seems people have got different settings for random reasons. Can you explain why you've got your settings where you do it? Yes, of course, I'd love to. So let's have a quick butchers here. We can see that. And I think you're all using the latest version, which is the 1652. Anyway, this version is the one that looks like this. And I mean, I have a risk reward multiplier of 3 and price and balance release period of 3. And this one is set to major, but you know, this one is probably going to disappear in a future release because it's not terribly important. Oh, there's a lot of people let all these guys in. Okay, good. And so, I mean, I have them on this, and I mean, everything else is pretty much the same. I mean, the algorithm hasn't changed. It's the same, but I mean, these 3 and 3 is normally pretty good. Does anyone here not know what these mean? Because if you don't, then I can explain what they mean, because they're actually pretty important. And it's just maybe good to understand exactly what it is that they are actually doing. Okay, Dan, you're using 1651. Yeah, an update to the latest version. Let me get you a link quickly. And then you can grab the latest version. Okay, I've got a link here. Black Diamond, here you are. Okay, here's the link. Let me do it so everyone can see. Here's a link to the file, and the password is BDFX, Black Diamond FX. That's the password. Because it's a zip archive, and that zip archive is password protected. The password is BDFX. So delete the old one, run the new one, and of course, my pleasure, Dan. And then you should be doing just great. But then you'll be using the exact same version as this. But I'll just reiterate what this means here, because it's pretty important. And we have the risk-reward ratio. What does that mean? Well, the risk-reward ratio means that price, once this area is, in order for this area to be identified, once it's established, price has to move away from this area 3 times the size of the area within 3 periods. So 1, 2, 3. So on the close of this candle here, price has to have moved away at least 3 times the size of this, which it has 1, 2, 3. You're pretty much maybe almost to the pip there. So it wants to look like that. But you can change that. You can say, well, okay, I want to see, you can really scrutinize these areas and say, okay, it has to move 2 times and it has to happen in 1 bar. Then you know there's enormous acceleration there. And you can see here, wow, okay, this one did. This is a decent area, because when price left here, we left 2 times the size of this area within 1 bar. So that says that we have an incredible imbalance in supply and demand at this area. And the last time price came down to the area, which is just here, price jumped up like a kangaroo, went flying up like that. So we can expect that there is going to be people that are interested in buying once price comes at least below the low of the previous attempt to move into this area here. So the ideal entry is the high of the box, but the area that you could start to buy is here. So you could start to scale in here and then scale in until you reach kind of the area that overlaps the edge of the box just here. So we can just give another example. We can go down to the hourly chart, for example, and you can see that let's find some really strong levels and say, okay, we want them to move in 1 period. So we want 3 times the size of the area in 1 period. You see there's nothing here. We have this one again. We have this one down here. So this is a whopping area. This is another good one. You can see there's nothing here. None of these have been consumed. We have this one here. When price came to it, it held and went higher, but then it was consumed. So this area was consumed by this one. We go to the weekly. We have this one here. And look, if we were looking at this on the weekly chart and we were asking ourselves, okay, where is the origin of this move? You can see the origin of it is just here. And so this is what happened the last time price tried to feed into this bearish liquidity. So don't you think that price will probably move pretty far if it manages to move above these highs and move into this area of supply here? I think so. I think so. We don't know for sure, but we think so. And you can see there's a lot of trading in here. If we look a little bit higher, we actually have this nice fresh area of supply just here as well. Okay, super. Okay, so you find the origin of the move, and that brings your attention to a major turning point in the market, and then you put your rectangle on the bottom on that turning point, and then you ask yourself the question, is this a parent or is this a child? And this will bring your attention to the real supply and demand and not reactions to them. And so, yeah, you you draw the box and then you adjust it. And then once you've found the area that you like, which could be, let's go back to the kiwi. So imagine that we got here. Then you ask yourself the question, okay, how did price leave last time? So how did price leave once price left? And you can see that, I mean, price left there like a, yeah, like a train in a real hurry. This is good. Then you ask yourself, well, how long did price accumulate before it left? It accumulated for one period, which is also very good. So we have two of the most important quality checklists, the points on our list that are all giving us a thumbs up. And so this would, enable us to take this trade here with a great deal of confidence. And yeah, and this is why. This is the kind of stuff you'll see. And this is exactly what we're seeing on the dollar Japanese yen as well. And it's pretty simple. It's a pretty simple method. I'll do it once again just so we can get an idea of what we're doing. Let's find another pair. Let's do the euro pound, for example. And you can see that for the time being, the current move. So we have this. The current move is this one here. Let's go on the hourly chart. See, the current move is up here. So the cheapest we want to sell is, we'll just box off the whole area, is here. So you go like that. And you want to know if this is a parent or a child. So you mark off the high and you look left. Are we reacting on something, or did we establish this area independently? And I might have to go to a bigger time frame because I might not have any data. I'll do that. So we'll go left and look. You can see still up there in the sky. I have to go pretty far back. Let's keep moving. I can't even see it on the 4-hour chart. My broker's not giving me any data. Keep looking on the daily. There it is. So you can see here. So is that to the right a parent or a child? But you can actually see it's a child, and the parent is this here. So if we do that, we go back to the left. You see that this was actually a child, and the parent is the one just above us. What does that mean? Well, that means we don't want to sell here. We want to sell here at the 93.27, 82, maybe a 90 pip stop and a position of around 10 or so lots for this trade. So I mean, this is a nice example. So I'll just go like this. Make sure we've got a bit of a. Then then once you find the area, we'll do it properly. How did price leave once it was there before? It left very nicely. We probably had on the 3 bars, 1, 2, 3. We probably had maybe a 2 or a 3 to 1. We can measure that quickly. So we had about 80 pips. We want at least 240 on the 3rd bar. We got 230, pretty close. That might be just fine. And you might be asking, looking left and saying, well, actually, this is reacting to this. So doesn't that make this the child and this the parent? It does, technically speaking, but you have to focus on the current imbalance in price. And from the point that price left here, it has not returned. So this is the price imbalance that is currently in play. And so our attention is on this one and not on this one. Because also if you keep doing that and say, okay, this one is a child, here's the parent, this is a child, this is the parent, this is also a child, and here's the parent, then you can keep going, and then you'll have your entries to trade, I mean, hundreds or thousands of pips away from price, and you'll never get any trade. And so you have to find the one that is currently out of balance. and focus on that one. Once price returns to this area here, then this has been rebalanced, and then your attention moves from the low here to the high, and then you start doing that. And you would look at this and say, okay, is this a parent, is this a child? Well, this is reacting to this one here. But this has then been rebalanced, and this one has been rebalanced, and that would bring our attention then to this up here. And then you move this up, and you say, when can I start selling? Right there. So this is the next area we would look to sell at. Once price fills this price inefficiency here. So if we zoom out, go to the weekly chart just to see, or the monthly, and you can see, yeah, this is a major high on the monthly chart even, and this is a major high on the weekly. And so we can certainly, let me change this name because my label got deleted. 96.50 is where we can start selling once price returns to this, and we're getting pretty close to it. So we can certainly expect this to happen in the relative near future. And so, can you see how relatively simple this is? It's not. I really hope that it's that it seems relatively simple, because it's not. It really is not rocket science. It's just a matter of bringing your eye on just certain movements and characteristics in price. And a price chart is actually showing you what you do not need to see. And so it's a little bit counterintuitive when you look at a price chart and you think, okay, here we have support and here we have resistance. The price chart is actually should bring your attention to what you should not be focusing on. You should be focusing on everything above here and everything below here, for example. And so it can be really difficult to kind of pull your eye away from this and focus it on stuff that isn't there. I mean, there's nothing up here, so why should I focus on that? Well, there's nothing here, so why should I focus on this down here? And it's simply because, if I can draw it in a way that's somewhat clear. Okay, so how can I draw this? So if we have current price right here. So we have prices just here like this. Then we have like a curve that looks like this, like so. And so this is liquidity, and this is price. So price, you can see the liquidity is pretty low around here. But as soon as price starts to move to the extremes and come up here, which is to the extremes like up in here, then price is reaching thicker pools of liquidity. So once price comes up here, we're going to have a tough time moving through that, because you know that there's going to be an awful lot of interest in selling once price comes up here. But if you're buying and selling in here, then you have your work cut out for you, because you're going to be imagining these trades like mad. And also these, I mean, there's not a whole lot of liquidity in here. Yeah, we have a little price imbalance here, but I mean, it's in the middle of nowhere. And so you know that here we have this move, we have the point of origin of this move is here. And so you know once you start buying here, you're going to be around here, so like somewhere like here or here. And you know, for price, in order for price to move through here, I mean, something crazy is going to have to happen, or there has to be an enormous order, or a central bank is going to have to do something completely crazy in order to bring price through these pools of liquidity and drive price ultimately through this, which is probably not going to happen. Well, without there being an incredibly big reason for it. And so ideally, as traders, we want to find the areas that price is most likely to turn at. And you're going to find these in the extremes. You're going to be selling at the highs, and you're going to be buying at the lows. Yeah. Cool. So that's I mean, that's pretty much the strategy in essence. And I know a lot of people have strategies for a lot of different strategies. I know a couple of Danish guys who have this place called a daytrader.dk. It's like the biggest trading portal in Denmark, or day trader portal, and they wrote a book here. Really cool guys, really interesting book. And these guys interviewed 1, 2, 3, 5 of the most successful traders in the country. And these guys they trade everything. I mean, one of them, he's a bit of a hot shot. He's a London-based guy. His name is Tom Howgore, and Tom Howgore trades currencies. And there are a bunch of other guys in this book. And some of these guys have like 10 or 12 strategies, 9 strategies. And I find that a little bit confusing, because you have to be very aware of what the market's doing to know if you're going to be applying one strategy or the other. And so I think when you trade supply and demand like this, I mean, ultimately you have one strategy that you can apply on any time frame and on any instrument. And so you know that once price comes up here, you'll be selling, and you know that once it comes down here below this low here, then you'll be buying. And so it really makes things a lot easier to deal with when you're only dealing with one strategy. And it is pretty much just this one main strategy. Peter's saying here, in what way could fundamentals be considered in the context of supply and demand trading? Well, fundamentals are actually an important part of supply and demand, in that shifts in the fundamentals for an economy or a currency is going to bring price to the extremes, which is where we're going to have our orders to buy and to sell. And so we have, assuming that we have this is a good order, a good level. Imagine we want to buy here. We need news. We need like a shift in the fundamentals, in the sentiment, to bring price down to our entry. And so if you're trading in the middle of this range here, as we just saw earlier on, every time a news release comes out, your positions are at risk. But if you're selling here and you're buying here, you don't really care about the news, especially if you're doing it on the 1 hour, at least the 1 hour, 4 hour and up, daily, weekly, monthly. Then you don't care about the news. I haven't looked at the news for the past 2 years. Number one, it doesn't interest me. Number two, I don't know anything about it. I'm not an economist. I can read what GDP is, and I can see that it's going up, or I can see that it's going down, but it doesn't make me any cleverer. As an example, if I knew if a PMI was coming out of England and I knew the result of that before it came out, would I be able to use that to my advantage? I can tell you that no, I wouldn't. I would not be able to use that information. Why? Because when news releases come out like that, if the news is good, you would expect price for the currency to go up, but sometimes it doesn't. It goes down. And so, I mean, you can expect good news to be good for the currency and bad news to be bad for currency, but it doesn't always work that way. And so it's super confusing. So even if I knew what all of these news releases were doing before they came out, I still wouldn't be able to use it, because I don't think that fundamentals changes the whole concept of liquidity on the price chart. Unless if I knew what the Fed was going to do with regards to interest rates and when, then you might be able to use that, because interest rates are the ultimate driver of price. Because this is what they use. Because interest rates are used to tackle inflation. So maybe interest rates. If I was a superhero and I could have one superpower, maybe knowing interest rates prior to their release, that might be one of my super skills that I'd like to have next to flying and climbing on walls. Anyway, but I mean, I think when you hear me speak about this stuff, I think you can hear that I get really excited, and it's because that it's so exciting to be able to see price like this, and it changes everything. It really, really does. And I think that if you learn to focus your eye on what the chart is not showing you, then you're done. Then you've got it all figured out. Does anyone have any questions about this stuff? Is it confusing, or is it something I said that doesn't make sense? Should we do another example, like look to another pair? Does anyone have an instrument they want to look at, maybe, that we can look at that and then we can watch the level and see what happens once price gets there? It might be a good exercise, actually. We can find something and we can have a look at it and maybe see what price does when it gets there. I can see that some people have their hands up. I don't exactly. Let's have a look here. I can see that Brooks has his hand up. Yeah, I don't even know what I can do. But if anyone has any questions, you can just fire them off in the chat here, and we can get to them. Michael, what do you reckon? Is there anything here that do you think I'm missing, or?
I don't think so, Sarit. You know, I mean, it's pretty straightforward. I mean, I'd like to see what the manager's on, and see what their thoughts are. I mean, it's very clear to me. But
excellent.
Yeah.
Does anyone have any okay, good. Dan is asking, what's the difference from version 16.1651 and the 1652? Yeah, we just covered that. Let's have a look. I mean, the difference is that I went from an integer to a double here, and so now you can say that I want a risk reward of 0.5, for example, 3.5, so half a risk, so I can go like fractions. I think that's in this one. There are performance enhancements in 652 in this one. There is, what else is there? There's some other compatibility enhancements with some other indicators. Some minor things. Performance was a big one. I think I added this in the 652. I don't remember exactly. And stuff like that. Some small modifications to the core. Yes, good. Sunny is saying there were some dotted line zones in the software. We are currently using 651. I think in 651 the dotted lines were there, and I'll explain what those mean because those are pretty important. Okay, here we have a dotted one just here. So you can see here how price sold off, and we accumulated, then we sold off. So the indicator, flagged this area as being a good area. Price came up to it, it tested it, and then it went down. And since the test, this rectangle has changed from a solid border like so to a dotted border. And the difference between a solid edged rectangle and the dotted edged rectangle is simply that the one that's dotted has been tested, which means that it's lower probability, or it means that you should be looking to enter not at the edge of the box, the lower the box, but at the high of the test into the area, if you still believe in this area, and if price has not moved too deeply into the area. Because you can take it multiple times, but you want to make sure that you're paying a better price once it gets in there. So that's the difference there. Let's find another one where we have, here we have another one here, how this area was formed, price left, and then it poked into it. So this moving back into the area tells us that, I'll zoom in really close so we can see, it tells us that we don't really want to be buying for a price any more expensive than the low of this one, which is pretty much at the bottom of this area. The reason it disappeared is because the configuration, I'll just change that quick. Let's do like 1,000. Should come back now. So you can see how this one was formed and price came back and it moved all the way through it. So that means that we don't want to be buying here. We want to be looking to buy at an area no more expensive than the low of this area here, which brings us into this here. So that's I think that was in the 651, I believe it was. Erton is saying, is the indicator drawing zones on all of the price gaps? It might do, actually, depending on the size of the price gap. The price gap has to be pretty big. What was the one that I was looking at today? There was a price gap on something that was on the hourly chart. I remember the colors. Let's have a look. I don't remember which pair it was. But there was a gap today. Oh, it was the Aussie yen. Now I remember the Aussie yen. This one. Here it is. So you see how price gap down, and then price gap down. You can consider a gap simply as a bar that opened here and closed here at the close of this candle. So, I mean, that's how I view it, at least. I mean, the price was not, they weren't quoting prices at prices between the close of this one and the open of this one, but you can pretty much consider it to be just like a big bar that went down. And so would you call this a good departure? Absolutely. Price gapped away from an area, which is actually the best kind of departure from a given area. So when price gaps away, this is generally a good sign. This means that there's tremendous imbalance in supply and demand. Eric is saying here, why does the software not draw 4-hour zone on the pound? Let's have a look. This one here. Yes. Let's have a look. First of all, let's have a look at the size. And then that's 45. It would if I change the configuration to 2. So if the risk reward is 2, then it will draw, or it should do. Otherwise, yeah, then it drew it. It's because the risk reward wasn't as good as I like to see it. Yeah, so that's the only difference. And you can see that, I mean, this one bar gapped away, and then these new bars, they didn't really manage to do anything. They didn't move any lower, and so we were dependent on this candle only for the 3-to-1 within 3 candles, which we didn't get. So you can certainly do that, and you can, I mean, if you want to find really good levels, and you can do, for example, I want to see at least a 1-to-1 within 1 candle, and then you're going to see kind of a different beast. We have this one here, we have this one here. When price left here, it gapped up. Another one here, another one here. But then you're going to get some of these ones here. When price left here, you can see it gapped up the size of this, and so it's going to change the location of things. So just kind of fiddle with the configuration and have like. I'm actually currently working on an automated trading robot. I'll just show what it does. It trades the exact same way as the supply and demand indicator is doing. And I'm using it, I'm not using it to trade real money, I'm using it to validate these parameters, the risk-reward ratio and the price imbalance. And so I'm going to do back testing over the course of, let's say, 10 years, and I'm going to see which combination of these two gives the best results. And I can use this, of course, for recommendations. So I might put it on a server and let it run, but I mean, you get really slow results, which is why I need to back test. So that should be pretty interesting. And when I have those results, I'll be certain to give those to you. Because that might be, I thought that'd be a really good way to, let me remove that. There it is. It'd just be a really good way to confirm that the settings, I think, are doing that. Super. Is anyone frustrated about their trading? Is there something you're doing? You're doing something wrong, you feel you're doing something wrong. Has someone taken, let's say, 5 losses in a row and feeling a bit like down in the dumps about that? Yes, Erica, did you say yes to that, or was that yes to my previous comment? Yeah, okay, really good. This is cool. Erica's saying here that he had 6 losses in a row. And I know that can really suck, but I want to show you something that's remarkable. I just got to find the window. Where's my browser. Okay, so let me find. It's going to show an account. Okay, I want to show this account here. This is a guy. We're opening a fund in Denmark, and we're recruiting traders, and we're doing it one trader at a time. And this is a guy that we have doing some testing for us, and you'll notice here, orders closed. Look at his losses here. 1, 2, 3, 4, 5 in a row. 1, 2, 3, 4, 5, 6 in a row. But more importantly, I want you to look at this. Average win over 10,000, average loss under 3. And so he has at least a 3-to-1 for his trades. And so knowing this, this chap can put on these trades. He can take his 6 losses in a row, and he's throwing 0.25% per trade. Each time he loses 0.25%, which isn't a lot. That's what he's comfortable with. So he's allowed to do whatever he likes. But he knows then that if he gets a winner, which of course he will, that he's going to clean up 3, 4, potentially 5 or 6 losers prior. So he can have those 6 losing trades, and 1 or 2 winners is going to clean up those losers, plus give a bit of profit. And so I know it's super frustrating, and I know that every time you take a loss and then another one and another one, each time you take a loss, you feel more hesitant about putting on the next trade. And when you feel that, that's a warning sign, because if you doubt your trading model, things can get a little bit tricky, because you have to remember that when you trade currencies, or just trade generally speaking, you have to remember it's a game of probabilities. And so you do not need to win 80%, as some people will claim that they have, and that's fine. Some of them might have, but you don't need that. You need a success rate of, look at this guy, he wins 30% of his trade. He loses 70% of his trades, and he's still performing really, 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 really well, better than most people that I've worked with. This project here, and so you don't really have to care. You just have to keep across those. But if I start doubting, then the whole probabilistic model is going to go out the window, and then the count will suffer. And so every time the trade is qualified, you have to put it on. And I know it's a killer, and it's counterintuitive to what we normally do. It's like, you put your hand on a hob and you burn yourself. That burned, I'm going to put my hand on there again because this time it's going to be cooler. It's not. You have to kind of keep putting. You have to keep putting skin in the game, because eventually you'll get that winner that's going to clean up the previous 5, 6, 7 losers. So you just have to keep doing it. But it's tough. It's really, really tough. Yeah, it's true. I mean, a lot of these levels are getting crushed, and this is, of course, high volatility means typically lower liquidity, and the supply and demand trading model needs liquidity. And so if you're finding that these areas in the middle are not working, then just focus on the ones that are, which are the ones that are up here and the ones that are down here. Because you know that we have a thin liquidity here. The intraday liquidity is maybe a little bit low, but you know that macro liquidity up here above these highs here on the 4-hour, daily, weekly, monthly, and below the lows here is going to be much stronger. And this, of course, is going to positively affect the outcome of your trades. And you'll get fewer trades, but you'll get the bigger risk reward, and you'll see price generally turn around these levels a little bit more aggressively than this kind of no man's land in between them. Cool. So I hope you're not too discouraged, Eric. Any other questions? You want to do another example before we wrap up? Does anyone have a symbol they want to look at? Stephen is asking, how many trades do you take in a month? It varies. Recently, I've been trading more. So, I mean, today I had 2 trades. So this week, 2 trades. Last week I had 4 trades. The previous week I did like longer term stuff, so I didn't have any the previous week. And so it depends on the time frames. And the cool thing about supply and demand is that, like, you can say, I want fewer trades, I want a lot of trades. And so the model is exactly the same, which is the beauty of it. You don't have to change the configuration of the indicator or do anything different because you want a little bit more action. All you do is change the time frame. And so, yes, which I really like. I really like that because things don't get complicated. Things remain simple. The only thing that changes is the time frame that you're trading on, which I really like. And so it varies. This last week I was doing a lot of consultancy security work, and so I had those 4 trades, and that was it. This week I'm at home programming, doing trading, and so I'm probably going to get maybe a few more trades. I'm in this one here, this Ozzy Trade at the moment, the Aussie, where is it? The Aussie yen. Here I sold up here today because of the gap. I like the gap. You see like the black space at the top, my stop's above here, so there's some protection. So I'm expecting price to maybe move down into here somewhere, at least to these highs here. That'll probably happen during the night when I'm in bed. But you can see also that this is an area here, and this is kind of a test into that area, this 4-hour area as well. And so that's what I liked. And also closed the gap here, which was pretty interesting. So this is like the second time back. We're closing the gap. So these things overlap nicely with that price level. Does anyone, should we do like maybe another example? Should we look at a specific, like a pair, a specific pair? Or is everybody good to go? Pound yen. Cool, let's do it, Eric. Pound yen. What time frame? On the 4-hour, okay. On the 4-hour, good. Okay, so if you look at this, you know what, we're going to turn the indicator off so we can't cheat. It's a little bit cheating. We'll go like, we'll turn this off, and we have to find all this stuff ourselves. Cool. So the current price, we have this, and price is leaving this. So this here is the origin of this move. So we're going to mark off this area here, like that. We're going to mark off the low, and then we're going to ask ourselves a question: is this a parent or is this a child? We have to look back. So we'll zoom in. You can see that actually we're reacting to this. And so we would move our rectangle over here, and would make sure that we're not paying a price any more expensive than that. But if you look over here, you can see that price is actually, it goes all the way down to here. You can see this one just here. Is that clear? Let me zoom in a little. You can see just here. So it's not very clear maybe, so let's go into the smaller time frame. Go to the hourly chart. You can see it looks like that. Yeah, we'll do it without the indicator. So now we have this area down here. So we have, this is the candle to the left, and these 2 candles are accumulation and they're related. So we'll mark it off like that. Then we do this apparent or a child. You go like that. We have a look, and we go left, and we have a look. See, actually, you see that we're reacting to this. And so we can mark off this. Then we're going to go to the smaller time frame because there's not a lot of clarity there. You can see that price left really nicely. That was a pretty nice departure. price has been back here, which brings us down to here. So I think for this one, we could say that we won't keep going forever. We'll just, this is within that one. We're just going to mark off the whole layer. So we'll say that it looks like that. We'll give ourselves put the stop in some black space, something like that. Back to the 4 hour, see where we are. Have to go to daily, I think. You can see that we're somewhere in here, which is below these here. So this is the buy. If we're looking to buy, we'd be looking around there. But assuming that we want to look up here, go back to the 4 hour chart, and we'll look for the origin of the move. So this whole move down started up here. So we'll mark off this. Mark off the high. Scroll. Parent or child. As we're testing this level. It's been back there. It's been back there as well. It's been back there. You can see. Actually, this is where price is. I think I've got this all messed up. We'll start over. So there. And this is where it is. Okay, but you see we can't really see anything in here, so we have to go to the smaller time frame for a bit of clarity. Hopefully I don't have enough data. Oh, you can see here. So if we go like this, I don't think I have any more data. If you can see, the candle back is here. So the supply is here. So entry at the high, stop above the high there. So we're looking at something like that. So this is where we can sell. Yeah, something like that. And so you could look to buy from around here, and you can look to sell from around here. And if you look up as well here, you can see that we also have stuff up here as well. But this will probably bounce off this, I think, because also this area of supply here was also the one that closed the gap here and moved below this low. So there's a lot going on in here. Yeah, and then you can keep looking above. We have some other levels here, which is testing this. And this one here is still untested. So like from here and up would be an area that you could look to. So because this one is still out of balance. And this one here, you can see that actually price, it's funny because price is testing the high now, where price came back to now. So let's actually have a look and see what it looks like. So prices, you can see price is kind of feeding into that now. So no, we're way below price, so we have to mark off the high. Tested. All these damn lines here. Let me do this again. Just to make sure we got the right one. Yes, good. Okay, so this is as high as it's been. So this is uncharted waters. You can see how how price reacted last time it came up to there. We had a really nice release. First time, second time, a really nice release. Third time, really nice release. So this will be the fourth time back. So we can expect price to go higher because this has been tested quite a few times. So it's probably going to move up into here and maybe retreat from that area. Or this area up here, which is also just a really nice pattern here at the top. I like that, like this. Just a nice, well-formed area of supply. There's something like that, I think, Eric. Does that make sense? Super cool. Excellent. And you have my email as well. If you want, if you have any questions, you're welcome to shoot me an email. We can have a look at something. Good stuff. Mr. Salerno, how are we doing?
Suri, you're amazing. I don't know how you do it. It's probably close to 1 o'clock in the morning there, and I don't know how you do it.
Not quarter midnight.
And you're a family man and all your other obligations. And you do it like it's 10 o'clock in the morning there when you get on here. We really appreciate it. You make it sound so easy. Of
course, it's a pleasure.
You make it sound so easy, I think, and it's easy fundamentally, but it's just hard doing it. And you know what you have to do, but sometimes it's just so difficult, and it takes time to just get in the groove where it just kicks in.
Totally. It does. It really does. It really does. But yeah, that's it. You just kind of got to keep at it, and eventually it'll make sense. And like if you're picking the extremes, like we discussed today, then I think you'll do a lot better than if you're fighting with this stuff in the middle here, because it does make things a lot more difficult when you're trying to find those turning points in the middle of something like this, because it's tough. It's very tough. So you need liquidity on your side. And that's what's going to change everything. Brian is saying here, does a greater period multiplier still work the same? It does. It does indeed. And so if we enable that here, the greater period multiplier, we'll turn this back to 0. It's on. If I go 0, 1, it's going to show me the current and the current plus 1. You can see we have daily and weekly here at the top. Looks like they've been tested. We have this daily area here. We have a weekly area here that's been tested and price retreated. And a couple of weekly levels down here as well. So yes, it works exactly the same. Yes, Eric, picking extremes on any time frame. But of course, I mean the ones on the 1 minute chart are not going to be as important as the ones on the bigger time frames. You're going to see reactions generally, but you have to be a little bit more careful. If you look here, for example, you can see how this is on the 50-minute chart. So we've got like a base here. So you mark off the low, you scroll back, and it brings us to this. Yeah, so we got this one here. So you're probably going to get a reaction here. Keep in mind this has been tested before, which means that this one has not been tested before. So this one's also okay. We zoom out, you can see that, zoom out quite a lot, that we had this one, but we have a nice one here, and this one has been tested. This one will probably hold again because we had a pretty nice reaction the first time. So yes, and to the upside we have, we can do this again on the 1 minute chart if you like. So you mark off the area. You scroll back. See what are we reacting on? Is that it? Maybe here, maybe not. Here. So we reacted at this, which is not very pretty. This is better. You can see how price kind of moved around there, but if you look here, you can see that since the release from here, price has been back to here. So you want to start looking to sell from here and above. So if we mark off that whole area, it's a really big one. We just go from here to like that. I mean, it makes perfect sense on the hourly chart. It makes perfect sense in the hourly chart. How we have this area here. So let me move the indicator lines. We have this one here, price left. We tested the area, so you don't want to be selling for a price any cheaper than the high of this test. And the colors, we found this on the 1 minute chart. and now we are on the hourly chart, and it makes sense on the hourly chart. And you'll often find that even though you are on the 1 minute chart, the area will typically make sense on the bigger time frame, and that's ultimately what you want. But once price returns to here, then this has been rebalanced, and you might even argue this is already rebalanced. And if you're of that conviction, well, then you have to look higher. Where has price not been? And it has not been here. This is probably like a daily or a weekly level. Yeah, how we have maybe even a weekly. Now we have this area just here. From here to here, which is like that weekly level. So you go back down and you can see it. Just here, it's kind of roughly where that area is. You can see, well, between this is the bottom of the weekly area and this is where the selling pressure will probably start. So as it moves up into here, there's going to be a lot more people looking to sell, and we're going to be moving into that steep curving pool of liquidity, of bearish liquidity to sell there. Super good. Let's see, how long have we been going for? About an hour and a half or so. If there aren't any more questions, I think we can wrap it up so I don't keep you guys here any more than necessary.
Sounds good to me, Sir Reed.
Excellent.
Very informational. Very good, as always. Very
Super.
good.
Perfect. Hey everyone, it's such a pleasure to be here. I really enjoy doing these sessions. But I'll get this all packaged up and put on the playlist. Do you guys have that link to the playlist, by the way, with all of the other webinars?
I think some of them might. Some of the newer managers maybe don't have it.
I'll just put it in there
on YouTube. Yeah.
Let me grab those, the link to it, so you have it. Playlists. Okay.
You have any more trips planned to the U.S., Sir Reed, at all in 2016 or no?
No, we actually be going to Mallorca in about in about a month and 10 days. It'd be nice. It's about the time that we're all fed up for the Danish winter. That'll be quite nice. But yeah, but yeah, well, I mean, of course, we're definitely going to be back to the US. It's there's a lot to see there. A lot to see. It's huge. Also, when we were just there, visiting.
I know, up Montana, and you went up to Canada.
That's right. It's you spend a lot of time in the car, so we're not really used to that. I mean, we had a car, but we sold it and we bought a cargo bike. So we don't drive a lot in Copenhagen, and so it's kind of a bit of a shift. But it was cool. The countryside's gorgeous and such a vast country. It's phenomenal. Yeah, but I haven't really spent a whole lot of time on the East Coast, so I think there's a trip overdue.
New York, or this entire area, it's a lot different than Denmark, I'm sure.
Yeah, I guarantee it is. Does that playlist link work, everybody? Cool, excellent, super, that's perfect. And I mean, there we kind of cover the. My pleasure, Chris. We cover like price imbalances and currency strength in more detail, and like the core strategy as well. But we had the strategy today as well. This was like kind of the core strategy. I just explain it. It's the same strategy, but I explain it in different ways each time, just to in an attempt to get it to make sense. Cool, goody. All right. Well, I think we'll wrap it up for today. I thank you all so much for taking the time to be here today. And I hope it was interesting and you could use something of what we discussed today. And if not, just drop me an email. And my email is, and I'll be sure to get back to you.
Thank you. Thanks as always, sir.
Hey, great pleasure. All right, guys, I'll leave you to it, but all you guys on the East Coast, be careful. Get in your cars and head for the hills. We're watching over here in Europe, and like, yeah, from the edge of our seats, it's pretty devastating. But I hope everyone's safe and everyone's families are safe. It's certainly filled a lot of the media here in
Oh
Denmark
yeah.
and Europe.
Oh yeah.
Crazy. All right, guys. Well, listen,
Thank,
thank you all so much for being here. Thanks, Michael, for having me once again.
thank you, Sarit. I'll talk to you soon. Thank you.
Sounds good. Look forward to it.